Hey, Steve here from 11ish, and today we're going to talk about picking winners. How do you pick stock winners, specifically around when you found a company that's like perked your interest, got your attention. How do you know if this is the company that's worth your hard-earned money? To help me with this discussion, I have John with me, who is the type of veteran you'll want to hear from this type of discussion. So, John, can you tell us a little bit about your background?
Yeah. Hey guys. Yeah. So my name's John. I used to work out of school at an investment bank as an investment analyst. Did that for a few years, and jumped to a hedge fund, and was that's called the buy side. And was on the buy side, doing investments globally for all types of sectors, long short investment strategy, equities.
And you must have done a ton of research throughout your career, right?
Yeah. I read. I probably have analyzed hundreds, if not thousands, of companies, and I've looked at a lot of different types of things.
That's pretty crazy. I mean, that explains why you hear about professions like yours where you spend like 2 3 days no sleep because you gotta meet those timelines, right? When the earnings come in, or how you meet your deadlines.
Yeah, earnings is not fun because a lot of stocks can move a lot, even though it doesn't really perhaps change the long-term investment horizon or long-term investment goal. But there's a lot of volatility, so it's sometimes a time for stress depending on your strategy.
Fair, fair. All right, let's start from the beginning. I know I said that like we were gonna start with you already know what stock you already are interested, but I'm actually a little bit more interested even before that step. So, what are some sources that you recommend to find a stock in the first place?
Yeah, I mean, I think there's a few sources. The generic stuff, Yahoo Finance and all that is I think pretty well known.
Hmm.
There's more professional kind of forums and stuff like that, including Value Investors Club, which is I think free for everyone. If you just type in Value Investors Club, VIC, you'll see a lot of anonymous people writing up their investment theses on a lot of things. And my understanding is there's actually a lot of professional investors on there, so that's a good way to sort of understand how a professional investor thinks about some of the thematics and ultimately how they structure a argument to buy or short a stock.
Ah, that's very interesting. That's very interesting. I noticed that you didn't mention something that's more hip, like Robinhood or Webull or Stock Twitch.
From what I've read in the news, it seems like those are probably a bit more retail investor, which is fine.
Hmm.
But in terms of like if you think about the percentage of people that are retail investor in the market versus professionals are actually a lot more.
Hmm.
So if you really want to think of things from a hedge fund framework or even a Warren Buffett framework or just long-term valuation framework, you really have to think about like there's sort of three parts: business, people, and the accounting side. And I think Robinhood and some of these trading platforms aren't about any of that. So it's not about analyzing companies or valuations, more about analyzing this chart that sort of just goes up and down.
That's fair. That's fair. And my followers know my stance around that. I'm very much against reading the shape of charts. I'm all about value first, and if there is short-term gain, then by all means take your winnings and rebuy. That's really how I roll around here. What about finding, like, do you suggest in terms of finding stock picks in the news, or is that already too late? Because one of the things we talked about in the past is by the time it's in the news, a lot of times that's already like the value is already built into the stock, right?
Yeah, so it sort of depends. There's sort of two ways to think about it.
Hmm.
One is if it's like kind of company that's kind of event driven, so there's some type of merger or there's some type of new announcement, and this company historically maybe very buoyant, doesn't actually do anything. It just maybe is barely profitable, little to no growth, and then somehow they have an acquisition or they get acquired or something along those lines where it's really due to that headline.
Hmm.
I would say, yeah, that's probably, I would think it's priced in if
Hmm.
it's already on Bloomberg or CNBC or any of the other platforms. In terms of, just like other growth strategies, not strategies, but growth companies, you think about Amazon. Amazon's been in the news since we were kids in
Absolutely.
the early .com,
Yep.
and just because it was in the news doesn't mean it was fully priced in. So that's kind of how I think about it. It's really from a short-term perspective, whatever's in the news is priced in, but you really got to take a look at the long-term fundamentals or even medium-term fundamentals of any company, especially if you're trying to invest for the long term.
Fair, fair. And that's really great advice. So I think that's a great segue into talking about how we actually figure out whether a stock is worth investing. Just to kind of catch you off guard here, like, is there a stock that you in particular you want to talk about, or we can just talk about it more generally?
Happy to talk about any stock you're interested in.
Let's see. Well, since you mentioned Amazon, let's talk about Amazon. I haven't talked about Amazon on my channel yet, so this might be pretty hot. Because I know, some of your heroes are talking about Amazon right now, so this might be really interesting. So let's say I know Amazon's been good, right? Good. Everyone knows Amazon's good. And Amazon, I saw Amazon in the news because they're doing new shit that I don't fully understand because I haven't done my research yet. What is your recommended first step into me figuring out whether Amazon is something I should be investing in?
Yeah, so I mean, there's kind of three main parts, and the degree to which they matter sort of depends on each individual company. So, like we mentioned earlier, kind of the business model is one of the first ones that you really should understand. Two, you should really understand the people. If there is an element of like this person is basically what makes this company work. In Amazon's case, many people could say that's Jeff Bezos plus some of the very senior people that they have. And third, it's also very important to understand the math. The math is very easy, but it's important to understand how the accounting works. It's not anywhere close to calculus. But Amazon, for example, I think is a great example of where one needs to understand how things are recorded.
One out of those three probably can make up one audio podcast. Why don't we start with the first one? How do we deep dive on that one?
Yeah, sure. So if we look at for any type of company, I haven't looked at Amazon's annual report or anything in a long time, but for a business, we really got to think about, okay, first off, what is the product they're actually making or the service that they're actually providing?
Yeah.
Do we have some type of indication that a lot of people are interested in this? And is there continued interest? So I think the most recent data point of e-commerce in the US was something like 20% of all commerce is handled via e-commerce. So one may say, there's still a lot of growth opportunity for e-commerce.
Yeah, that sounds pretty low. Yeah.
Yep. So that would be like one. That's the tip of the iceberg in terms of the analysis one would do on that. But then on top of that, you think about just from Amazon's perspective first. Then what are the barriers to entry? What are the things that they do that prevent other people from copying them?
Yeah. How big's the moat?
Yeah. So basically, I think we already know all those. But if Amazon were a much younger company, 10 years ago, maybe 20 years ago, these would be things where can they actually maintain this moat of having great customer service and easy return policy and whatever else, etc.
So. Sorry to cut you off. So just to talk about like some of the stuff you just mentioned, like because I think if I'm a long-term investor, I'll be looking for certain things about their product vision and their user segment and versus short-term. Can you dive a little bit on that?
Yeah, so I would say it depends how one defines kind of short-term, medium-term, and long-term. So for short-term, one might say somewhere between a few quarters to maybe a year, or maybe slightly more. So that would be for a short-term investor. Some people may say, is Amazon going to beat this quarter or miss this quarter? From a medium-term perspective, someone, and this is all like short, medium, and long. It all sort of depends on the person.
Yeah.
But if you think about like medium-term from a 3 to 5 year perspective, it might be, okay, how do they you know, mature? Let's continue to use Amazon. How do they mature in terms of additional AWS, being able to capture additional market share? What's the trend from people using on site their own racks for cloud services for server services and moving onto a cloud-based version? That's an additional analysis that one should at least understand. So that's kind of like what medium term is. And then from a long term perspective, especially for Amazon, you're taking a bet on Jeff Bezos and some of his management. Like if you had, invested in Amazon in like 2005, I don't think anyone would have said like, yeah, Amazon Prime Video is definitely like the big thing, or
Yeah.
like AWS is the big thing. But you know that Jeff and his team are the people that clearly are able to execute very well and kill things that don't work well, like the
Yeah.
Amazon
Yeah.
phone. So
Yeah, yeah. So actually, that's a really interesting input you just gave, because, and I'm frankly guilty of this. When I'm looking at short term, long term, I'm looking at more along the lines of like, in a, let's say, because when I say short term, it's usually 2 quarters maximum, so 1 to 2 quarters. But then I'm also saying that in 2 quarters, will there be an opportunity for, let's say, 5 to 10% gain? That's kind of how I'm looking at short term stocks. If they're like, and based on that understanding, then I start looking at, you know, like how their business makes sense. I suppose. Did that make sense? Because I feel
yeah,
like I'm
yeah,
looking at it backwards compared to what you're saying.
that's interesting. I mean, so from, let's say, Amazon's perspective, or any high growth company's perspective, let's say their PE multiple is, I don't know, 10 times or 15 times. Um, and usually when you look at PE multiples, you're either looking at trailing 12 month or forward 12 month.
Mm-hmm.
In the sell side community and the buy side community, generally people are looking at forward 12 to 24 months.
Yeah.
So what that means is if you're looking at something that's trading at, just make the math easy, 10 time price to earnings, but the earnings are growing 30% every single year, you could say that, if it's compounding at 30%, frankly, that means in 3 years, the earnings part is going to be over 100% of what it was now.
Mm.
And if you say that, okay, well, will growth slow down or will growth be stable? If growth is stable, perhaps they maintain the same 10-time price to earnings multiple that we said.
Mm-hmm.
If growth slows down, perhaps they go down to 8 times. Those are all actually metrics that you can sort of back out based on comparables in the world. So in terms of other internet companies, other service companies, for companies that grow at a certain rate, what is their commensurate price to earnings ratio or price to sales ratio or EV to EBITDA ratio, et cetera. And then you can actually plot that in a 2x2 matrix and with like a dot chart, and you can actually see kind of generally you will see that a higher growth rate warrants a higher multiple. So then the question is how much of growth, whether from sales or earnings, is sustainable.
Yeah.
And if growth is sustainable, then one could argue that maybe the multiple stay the same. So using that 3 year kind of 30% annual compound number, in 3 years the earnings will be over 100% of what they are now, but the multiple is the same. So we're going to make over 100%.
Yeah.
So the math is can't be very easy like that if you just take a step back.
Yeah, yeah. So I mean, I think that's and again, thanks a lot. That's really, really great input. I think that's I mean, I think that's probably, to me, probably a pretty straightforward way of, at least on a high level, filter out what stocks might interest you before you dive deeper into the business itself. At least that's how I look at it. Because to me, like looking at a business involves a lot more research than looking at their financials. Any thoughts around that?
Yeah, for sure. I mean, I think it's when you actually do research on a company, there's pretty much every company has competitors.
Yeah.
Whether the competitors are good or not, that's sort of up to the sector.
Yeah.
But I think it's still quite important to understand the competitors because, let's say you're invested in a company that makes irons, and this company is making the terrific irons, and they steam clothes and iron clothes better than anyone else.
Hmm.
But someone else comes out is spending 10 times what they're spending on R&D. But because you only looked at the company that makes irons really well now,
Yeah.
you totally missed the R&D spend of a competitor. And then you would have realized actually that holy crap, they're coming out. They have the potential to absolutely disrupt this industry, and then 1 year down the road they actually do. So it is quite important to be aware that when you're looking at a company, it's not just about looking at that company's financials.
Hmm.
It's also looking at other companies' financials. So similar to AWS, let's say, clearly you see Google
Azure.
Cloud,
Yeah.
Google Cloud Platform, you see Azure, um, spending a tremendous amount of money.
Yeah.
So it's important to also analyze it from that perspective. There's pretty much no company without competition per se.
Absolutely. And that's actually a really interesting thing that I want us to touch on too, which is that, and cloud is a really great example. We know that AWS is what, like $40 billion business now, 50, something like that. And you know that, Amazon's, not Amazon, Microsoft's Azure is worth a shit ton as well. And then, Google is dominating a piece of the pie too. And now you have, at least my opinion is, China is coming into the market owning APAC, but presumably they're going to try to go into the US market as well, right? At least that's, on the surface level, what I'm seeing, what I think is going to happen. So in terms of competitive analysis, like, I guess how serious I should be looking at, how should I look at the situation, I guess?
Yeah, I mean, so there's a few ways to do kind of the research here.
Hmm.
One of the ways that the professional guys do it is all the investment banks actually have sell side equity research analysts that publish the report, and most people just think of it as the buy or sell or neutral side hold rating.
Hmm.
But actually, I don't think that many people will actually use that rating by itself. What most people look at, if you're like a big mutual fund or a big hedge fund or any hedge fund, you really want to be looking at what the Goldman Sachs or Morgan Stanley or Deutsche Bank, whatever analyst is saying from their meeting with C-suite. So some of these analysts will meet with the industry, meet with investor relations, meet with the CFO, meet with the CEO, and also meet with industry specialists and things like that. And that's where, even though it is a buy or sell hold rating, there's actually like oftentimes a 10 page, 50 page, 100 page report behind it that is giving a lot of
Oof.
granular analysis. So that's, if you do have access to that, that's one way. Another way is frankly, just like think about it yourself. There's a lot of there's a lot of stuff you can do just by reading the annual reports and also
Hmm.
the quarterly conference calls, because the quarterly conference calls, anybody can dial in. I don't think very many retail people do, but those are all things that people can dial in, and you can listen to the CEO being asked questions by the Bank of America Merrill Lynch analyst, for
Yeah.
example. So these are all like free services that everyone has access to.
Yeah, so you just mentioned some really really insightful stuff about where you can get a lot of this information. I think the challenge, especially for retail investors, is that they want to limit the amount of time they spend researching the company. A lot of times it is kind of a gut feeling, even though we keep telling them not to do that. So, is there any thoughts about the bare minimum that someone needs to do? How much time they should spend, ideally, as a bare minimum, on a stock before they put any money down? I think that's a fair question.
Yeah, so I wouldn't think about it from the perspective of like how many hours you should spend. I would think about it from a perspective of, are you comfortable with your understanding of this company? Because some companies like theme parks, very clear understanding. Um, it's very obvious what they do. You don't need to understand anything about the business model,
Hmm.
and you just know that, hey, let's say, I don't know, coronavirus impacted this theme park, and this theme park traffic went down a lot, revenues went to zero, but they have a lot of cash, so they can absolutely survive. And also, when things come back, maybe they'll rehire everybody, and everything will eventually go back to normal. And if you have a 5 to 10 year outlook, that's one could argue that's a no-brainer, assuming you have confidence in the management that they won't over leverage the business or do something really really bad there. So those are the things where like you know 20 minutes of work, 30 minutes of work, like you can be pretty confident that from a long-term perspective if you're on a good track. It just depends like how both from a time perspective and percent perspective. So if you're buying Amazon for a like a 5% move, I think and you might actually have to do a lot of work because you have to be very, very extremely precise. Versus if you're buying Amazon and it obviously, let's say like right during the coronavirus, it crashed a lot, and you have a pretty good understanding of Amazon. You don't know every single small thing, but you're looking at the price to earnings multiple or any of the other multiples, and you're like, actually for Amazon probably not price to earnings, but maybe price to sales or something. You know, and then you're saying, okay, this is pretty obvious that this is a buy. Then I would say, okay, you're probably pretty okay with putting some money to work there.
So let me make sure I understood you correctly, because I didn't quite follow you when you say if I'm looking for a company, looking for a 5% gain off of a company. Are you saying it's very different than if I'm looking for what, like a long-term play? Is that what I heard?
So I would say if you're looking to earn 5 to 10%, it's actually a lot harder than looking for a company to make 100%. Obviously, those are different time perspectives because a 5 to 10% move can happen in a week.
Yeah.
And a 100% move generally doesn't happen in a week. In fact, it might take multiple years. So that's where, there's a thing in investing called edge. So do you have the edge? Do you know more about this company than every single other person out there, whether it's a professional investor or a retail investor, that when the earnings come out, what the real number was potentially going to be, most likely not, but more importantly, what the expectations were going to be. So the difference between expectations versus real, and that is this number good or is this number bad, and then knowing both those parts, you would have known, okay, to buy or short this company ahead of time. That's a lot of work for quarterly results. Some people do that really, really well. And some people, don't, and they think about it from a long-term perspective. It's different, frankly, just different styles of investing. But, from a longer-term perspective, there's less edge because at the end of the day, like Amazon has all these different paths that it could go down. No matter how smart you are, people don't have a time machine. So they can't say, okay, this is definitely what Amazon's going to do. If someone in 2001 had said, oh my gosh, I know everything that Amazon's going to do, I have so much edge, it would be like ridiculous. I don't think anyone could have predicted any of this stuff. So that's why investing by looking at both the barriers to entry, the ability to build additional barriers to entry and moats, and ultimately the ability of management to out innovate another management team is incredibly important from a long-term perspective. And if you're doing that, then you're on the same kind of playing ground as many of the professional investors.
That's very interesting. So essentially what I heard is that if I'm a short or swing trader on a 2 to 3 quarter basis, then I need to ideally have an edge in order to trade effectively. But if I'm trading long term, it's mostly about fundamentals and mostly about investing in a company that has been like proven itself, so that it has a bigger moat, it's known to innovate, etc., etc.
Exactly.
Yeah.
And the value of management is compounded long term. The value of management on a quarter by quarter basis is almost irrelevant.
Interesting.
Because okay, let's say you completely change strategy today. By the time we see results, generally for any medium to large size company, it's going to take a few quarters, if not years.
And knowing how to read the bare minimum seems to be really important. I mean, I almost feel like I should recommend my subscribers to take a Udemy class or something like that.
Yeah, I mean, I don't think it'll take long to learn. It'll probably take just frankly a few hours, and the value will persist throughout your entire life, whether it's for investments, but even from if you run a team or if you run the entire company.
Yeah, yeah, absolutely. So yeah, it's more about learning the basics and putting it in practice for sure. I think
Yep.
I think we talked about a lot today, and we covered a lot of topics. But what is, since we want to keep these podcasts concise and get the listeners back for more content. All right, John, thanks for your time, and I'll catch you next time for the next episode.
All right. Thanks, Steve.
All right, see you, man.
All right, bye.